All right, Mortgage Coach community, Dave Savage coming live, and I am with Pat Stone, is it chairman, CEO?
Executive chairman and founder.
Executive chairman, founder of WFG National Title, one of the largest and fastest growing title companies in America. And you have been in the space of title for a long time. So if you don't mind, before we get into questions, if you could just give everybody a little background on what you've been doing.
Well, starting 45 years ago, I was looking for a job and saw an advertisement for a title examiner trainee. Had no idea what it was, but I needed a job. So I got a job at $900 a month. And I learned how to examine titles, then I learned how to close escrows, and then I got into marketing and sales. The thing that fascinated me about it, and still does 45 years later, is the real estate process is absolutely full of opportunities to improve. And I have made a living trying to improve the process. And within virtually everything we touch, we see opportunities. And I think everybody in the industry would agree with that. It is a wonderful business. We help people, and every day we find out that there's something we can do better than we've done it before.
No doubt. Now, today, if you could just give us a feel for how many transactions are you guys doing monthly, annually, the amount of impact that you're making in the mortgage?
Well, in direct owned operations, we're doing about 30,000 transactions a month. And then we have 1,500 independent companies that write our policies, and they are doing multiples of that, obviously. So I can't tell you exactly how many we're doing. We'll do probably somewhere between 3. We probably do 1 out of every 38 to 40 transactions nationally.
Beautiful. So guys, the takeaway should be, this is a guy that's got his hand on the pulse of what's happening in the mortgage transaction beyond just the front end of the experience, the transaction itself. And if you've been tuning into this channel, I interviewed Steve Brown, the former futurist of Intel, and he was sharing what he thought this quarantine, 30 days of quarantine, and who knows what the rest of the year looks like, that it's whether it has already changed technology, it is going to change customer experience going forward, because grandma and grandpas know what Zoom is. Getting on a virtual experience like this is going to be more commonplace. And Pat, when you and I were prepping for this, you said, well, the technology innovations haven't happened yet, but I think what has happened is the adoption of technology. It's just things like, it used to be that like only about 50% of loan officers were comfortable sending out a digital link for the app, maybe even less than that. And now everybody's comfortable sending out a digital link. So the human adoption has massively accelerated. Would you agree with that?
I would agree with that. And if I may, I would suggest to everyone that the issue isn't so much a lack of desire to make the process more efficient, more transparent, quicker, with a higher percentage of successful closings. The biggest issue is the regulatory oversight of all the participants. And if you think about it, lenders, settlement agents, realtors, appraisers, inspectors, everybody's regulated differently by state. All the segments, all the verticals within the process are fairly automated. The level of and degree of integration between them is minimal. Now, it's getting better and it has gotten better. And I think this pandemic, to your point, has brought people's consciousness of the need to a new level, and willingness to use things like Zoom meetings and the internet. The willingness to use it more effectively has definitely occurred. Now, when I was talking to you earlier about it hasn't happened as fast as we want, that's more about execution. And a little bit of that is, again, regulatory. A little bit of it is enacting processes. Some of it's capacity. For example, RON closings. Everybody's talking about RON closings. We have, I think, with temporary approvals, we're somewhere around 33 states now that you can do RON in. But the ability to do RON, the need to do RON, and the capacity to do RON, it is having fairly minimal application right now. Same thing with what we're calling RIN. It used to be called AVON, Audio Visual Online Notarization. Everything that we're doing as an industry, and I'm talking about the real estate industry, not the title industry, everything we're doing is somewhat limited by regulation, somewhat limited by capacity, and the ability to enact it quickly. I will tell you this, David, I think to your point, I have never seen the industry so open to talking about how we can improve the process as it is right now.
Yeah, that is for sure. So Mortgage Coach community, some of you are watching this live, some of you are watching the recording. If you have a question, put it down below. If it's live, we'll answer it real time. And if it's recording, I'll make sure you get an answer to that. So let's talk not about the struggles today, because I think everybody has the struggles, but how much do you think it has accelerated? Like whatever we thought was going to happen 5 years from now, is it going to happen faster? If so, yes. And I've interviewed you before where I asked you, like, when do we have this fully end-to-end integrated mortgage experience? And do you have any new predictions or any new philosophies on what a year from now looks like?
Well, I think it will happen faster, and I'll relate that in real terms to exactly what we're doing as a company. I just got off the phone where we allocated another $1.5 million for a small project that's one of the components of this whole thing, right? And we did that instantaneously on a phone call. The individual that was involved asked for the money and said yes. You know, now 2 months ago, if that individual would have been, I would have said, hey, give me a prospectus, give me a detailed plan, give me this, give me that, give me whatever, right? This was a verbal yes on the phone with immediate response. So, and I'm sure that's being replicated everywhere by title companies, by lenders, by everybody, because everybody understands that we need to do this. Everybody wants to do it. Everybody has been presented with a situation where if we had a totally automated process, we would be coping much better than we are right now. We're doing an amazing job. I tell you honestly, David, I've been just stunned at how effective we have been, surprised at how effective we've been. The we here being everybody in the process, lenders, realtors, everybody. The ability to conduct transactions is much better than I assumed it was going to be. But I think everybody involved would like to make sure that we get to a point where the lack of social interaction, in-person social interaction, doesn't stall the process. It still does to a certain degree, but we are all working on making it better.
When do you think we're going to have a fully digital mortgage experience end to end?
Well, again, I'm going to go back. One of the most misunderstood or least understood aspects of the problem here is the regulatory environment. And the regulatory environment is still cumbersome and prohibitive. Having said that, I think it'll be faster than I thought a couple months ago. I doubt seriously that I will see in my lifetime a complete 100% digitized mortgage process universally. However, you will get more and more hybrid type e-closings. That will accelerate dramatically. And I wouldn't be surprised within 2 years, we're doing 75 to 80% of everything on an integrated basis.
That's impressive. What are some of the milestones? Like if I'm a mortgage professional or I'm a mortgage executive listening to this, what are the milestones that you see happening over the next 6 months, 12 months? Let's just do 2 years. What are the milestones that you see dropping?
Well, we've had, we have a product called My Home that really was focused originally on statusing the buyer and seller on the transaction so they didn't have to sit in the dark and wait with what was happening. Now we've extended that out. We're statusing the lender. We're doing various other things with it. One of the things that we pinpointed that would be absolutely critical for all of this is the creation of a secure data room where everybody can access the same transactional data as needed in a secure manner. That would go a long way instead of everybody rekeying all the data all the time. Be honest with you, David, I don't think I've seen a transaction without some error in it in my whole career, because the data is rekeyed so many times, mistakes are made. It's also cumbersome and it's stupid, to be honest with you. We rekeyed the name and property address probably 80 times during a transaction between all the players. This is nuts. Wow. It's just nuts. So I think that that's one area. Getting a secure data room is huge. Something that would kind of thread the buyer and seller information into every application as you go would be huge, wouldn't it? everything that would pass the transactional information across the whole process would be huge. That kind of stuff. I mean, the independent components of the real estate transaction, again, the verticals, the realtor, the lender, the settlement agent, these verticals are highly automated. The sharing of data is still minimal. There is some passing of orders and reports, but the sharing of data is just minimal at this point.
So you are two other things. One, you're a lot of things. You've been a friend and a mentor to me since I've lived here. So thank you for the annual, get-togethers we have. I always take notes. But you're an economist. You are known for providing your predictions or your forecast of what's going to happen in the years ahead. I'm not going to ask you for a full economic debrief, but I would like high level. Just, you did your economic update as we kicked off 2020. What adjustments do you see in the months through 2021? Anything you want to share with us there?
Well, what we did basically is we turned the TV off, right? I mean, this is a man-made recession. We basically, I mean, there's a bit of a parallel, if you will, or an analog with the Volcker recession of the early 80s. Paul Volcker, chairman of the Fed at that time, raised rates dramatically. Anybody who was in the business will remember that painfully. And you had mortgage rates 15, 16%. He basically turned the economy off. When we turned it back on, when rates came down, the recovery on employment was stunningly quick. And people still talk about that. There were 2.5 million people reemployed almost immediately. I mean, much faster than any other recovery from a recession that we've seen. So I think that's an analog that is pertinent here. And that is that we have created, I think, 22 million, somewhere between 22 to 26 million unemployed people in the last 6 weeks. A lot of those people would probably be better referred to as being on furlough. And when the jobs or when we re-engage the economy or turn the TV back on, they will be employed quickly. So I think that the recovery will be faster than a lot of people believe, although there are certain segments like some of the leisure and entertainment and some travel that are not going to recover quite as quickly. Now, key issue here that no one can really predict accurately at this point in time is how long is it going to take to get back fully engaged? And candidly, I think it'll probably take a while. We'll do it in stages. The reality is that we haven't really sheltered in place universally. So will we have a second wave? I think you're probably familiar with the Spanish flu in 1918, 1919. That killed 675,000 people because we had very little shelter in place. That was 103 million population then. So with the current population, that would be equivalent to 2 million people dying in 15 months. Obviously, we hope never to see that again. And I don't think we're going to, because we did react to it. We did have some leadership and some shelter in place. But we'll probably have a minor second wave. So it'll probably take, David, I think it'll take a year to get back to normal. But I think we'll get 90% back to normal by August or September. We'll see.
Got it. So guys, if you have questions, put them down below. We got another, 10-ish minutes to keep this conversation going. What about real estate? Most of the people that watch this are mortgage professionals. They do share this with real estate agents, and they follow Mortgage Coach and our content to be the smartest loan officer so they can have the smartest conversations with agents. So what about real estate values and housing? How do you see that impacted, and what ammunition do you have for a lender so that they can articulate it to a family?
Well, you start on a high philosophical level. One thing about anxiety in a situation like this is if you're a normal human being, you start thinking about your future and how you're going to plan so that you never get yourself in a precarious position. In other words, the average American is going to want to be a little bit more focused on accumulating wealth. And how does the average American create wealth? They buy a home, right? I mean, the reality is the average American, the best way they can, the best avenue they have for increasing their net worth for the average American is to buy a home. So I think buying a home will be desirable. I think interest rates are going to stay low for at least a year, and I do think that you're not going to see a drop in desire to buy a home. I think you're actually going to see it increase. Candidly, at the beginning of this year, I thought this was going to be a spectacular year because we'd spent 10 years recovering and we were in very, very good shape. Average FICO scores were up. We had income. We had the average American was running about where they were in the early 80s in terms of debt to income ratio. It was really looking very, very good. My gut is right now that we will recover, and actually real estate will be one of the healthier segments of the economy. Demand will exceed supply for the next 7 to 10 years. So people are going to need a place to live. And I'm going to tell you a hell of a lot, pardon my language, a lot more people are going to be looking to buy a home because that's a part of their long-term plan now.
Yeah, no doubt. And what about rates? Dan Rawich, I interviewed on Friday, and he made just an incredible case that they're going into the twos and could be low twos. I don't know. What is your thought on how low could they go? And his prediction was 2 to 6 months. He's like, I don't know when. I just know the fundamentals. In his words, he goes, the one thing I can't factor is the cost of forbearance and some of the bigger issues, how that is going to impact. So are they really going to get down into the twos? I know the fundamentals economically are there, but the cost structure, I don't know. What do you think? Where do you think they're going?
Well, I'll tell you right now, just sitting and watching what's going on, a lot of lenders that I know are periodically raising rates just to slow down applications because they are beyond busy, right? If you look at it just on a step back look at it, I think he's right. We have the potential to dip into the twos. I definitely think we'll go down around 3 for sure. And I think that's probably going to be the case for the rest of this year, maybe even the next year. Then I think we're going to start seeing a little inflation about this time next year. Well, one, we had the tariffs, which disrupted the supply chain for certain products. That was going to create a little bit of inflationary pressure on imported products. This with the pandemic, really think about the supply chain now. I mean, whether you like it or not, and I don't want to pick a fight with anybody on politics, but whether you like it or not, globalization is really what's kept costs down on goods for a long time. Cheaper to buy a big flat screen TV now than it was 5, 6 years ago, right? So we've disrupted the supply chains, and between tariffs before this and then the pandemic, we are going to have some impact from that. Certain items are going to get rare or hard to get a hold of, and their prices are going to go up. So rates will be low. I don't know if they'll get into the twos, but I think they're going to get down around 3 for a while. And I think that'll be good for real estate, obviously. And then about a year from now, I think you're going to start seeing some inflation. Hopefully we don't continue the trade war after this, and hopefully we don't continue the tariff battles, because I think that would really jeopardize the recovery.
Got it. Remember, guys, questions down below, whether you're listening to the recording while you're listening to it live. So in my mind, there's very few people on planet Earth that know the mortgage transaction better than you for the number of years and where it's going. So we've covered a little bit on that. You're an amazing economist. And then from my standpoint, you're just an innovator. Like, you're a guy that I like to talk shop with. And I want to bring it down to point of sale. And there are just some nuances that I've noticed, and I want to hear what you notice. I think it's obvious that Zoom and other online virtual experiences are mainstream. So, at the point of sale, more people will always want to, well, hey, let's jump on Zoom versus come into an in-person meeting. People are going to still want to come in, but Zoom is going to be bigger going forward. At the point of sale, lenders and loan officers, when they ask a family about their cash reserves from a qualifying standpoint, I think that conversation is going to be different for this generation, because now we know what an emergency is, and we want to have money for that emergency for defense. And I also want to have money for offense. So I think that's a nuance that's going to be different. Like, a mortgage professional needs to think about how they're helping a family build wealth with real estate, not how they're helping a family get a transaction, more than ever. So those are two things. First of all, do you agree with those two things? And what are some other nuances that you think will be different as we roll into the new normal?
Well, it's interesting. Going to your first point about Zoom meetings and thinking about how we do business. It was fascinating to me, watch Zillow come along and basically allow the consumer to have access to the market without the realtor. It didn't displace the realtor as much as people thought it would, because it's still a very complex process, and you need a concierge, if you will, in the form of a realtor to guide you through it, because the average American doesn't do it that often. But it did give people access to the market. I think you'll see that amplified with the virtual tours now. Gosh, I saw a number that about 30% of tours are now being done virtually. So a consumer could contact a realtor, engage with a realtor, look at the market, do virtual tours, get all the way to point of make a purchase. And some people are making purchases without actually seeing the home, and then engage with the lender via Zoom. And I mean, we're going to get to the point where the process will take less time. Process will take less time from the idea of buying a home to actually executing the purchase, but also the purchase itself is going to take a lot less time. The average purchase right now runs about 45 days. Now, because of the pandemic, that's going to extend out to maybe 60 days, right? It's slowed down because every aspect of it is a little bit more, I mean, you're doing things, even though some of it's more automated, you're being more careful. You're also being more purposeful. And all the players are being very, very careful. But anyway, going from about 45 to 60 days, I see it coming down to 30 days, between 20 to 30 days within a year and a half. Also, I think what will happen is the percentage of transactions that closes are going to go up. I mean, historically, it's run anywhere from 65 to 75%, depending on the type of realtor, lender, market you're in. I can see that going up to 85 to 90% of the transactions that are initiated actually close. Now, that's good for everybody. Everybody will make more money. Everybody will operate more efficiently, and the consumer will be happier.
Love it. Well, first of all, I think anybody listening to it, coming from you, that's all good news. So let's close out on this. So we are, depending on where you live, what county, what city, what state, we're weeks from America opening up. And I think there will be lenders and loan officers that watch it happen. And then there will be loan officers and lenders that are making it happen. They are literally defining their brand and becoming the most well-known, most well-respected lender in the city that they serve. And so I just think there's a way to just sit back and, okay, America's opening up, let's tiptoe out. And I think as a lender or a realtor who wants to be that most respected leader, you guys, this is a time that what you do over the next 30, 60, 90 days, how hard you work, how smart you work, could define the next 2 years of your success. So I believe that in concept. So my question to you is, do you believe that in concept? And what are some of the things, whether you want to answer it from a realtor or a lender's perspective, that if you want to be that leader, how to show up? So what are your thoughts?
I not only believe that concept, you're absolutely right. And I'll tell you precisely how that manifests itself. When you're under tremendous anxiety, the way that I think any professional psychologist would tell you to cope with anxiety is to get perspective and context, right? And what the average person right now that's coming into the market, looking for a home or thinking about buying or selling a home or getting a mortgage, they want perspective and context. They want to understand what is happening right now, what's going to happen, how it's going to manifest itself. And a lot of it's going to be opinions, but giving people perspective on what's going on in the market, telling them exactly things are working, things are happening, things are going to continue to happen. Give them context. Here's where you are. Here's where I think it's going to go. Here's what you need to know. Staying in touch with your clients and giving them information which provides perspective and context will go a long way towards getting you loyalty and appreciation.
So tell me if you align with this thought. So to me, it comes down to, and I got this from an interview I did with Dr. J.J. Peterson, who is the co-author of Marketing Made Simple with Donald Miller. And I was talking to him, like, from a marketing standpoint, how can lenders and loan officers better position themselves uniquely? And he went on a whole rant on, you know what, clarity. If you can just communicate yourself in a way that's clear, it's not about how different you are.
Yeah.
It's about how clear you are at doing that. And then the other point he made, and not be the hero. Make the customer the hero. You are the guide and they are the hero. And so first of all, I believe in that. So do you not align with, if you're a lender, if you're a loan officer, or excuse me, a loan officer or a realtor, it's more important than ever that you get clear on your messaging and your value proposition and how you communicate it. Thoughts on that?
That's kind of what I mean by perspective and context. But yes, absolutely. People, people will also orient themselves towards experts, especially when a high level of anxiety or uncertainty. They will look for experts, giving people precise information. And don't be afraid to tell people, what they should do or what you think they should do. It is okay to tell them, this is what I would do if I was you, or this is what I think you should do, and here's why. People will appreciate that guidance. They'll appreciate the fact that you know about the process. They'll appreciate what's going on, and they'll look to you for advice. I mean, the reality is, for the average consumer, buying a property, getting a mortgage, closing the transaction, it is like Alice in Wonderland, right? I mean, it is something that they don't understand. They do it how often? They don't do it that often. So they're looking for someone that knows what they're doing to advise them. And if you come across professionally and give them good advice, good information, and direction, they will greatly appreciate it.
Yeah. So my closing thought for everyone, and I'm going to give it to you for a few closing thoughts, is that also is transparency. Everything that he was saying is you need to look at how you bring an uncommon level of transparency. Now, I'm Mr. Mortgage Coach. One of the strategies for lenders is to provide a family with a total cost analysis, because then you're giving them the transparency of options, which we all know that people are under stress. And we're under ultimate stress right now in this quarantine time, but when you're buying a home, you're under stress. So options creates transparency. Also showing the cost over time. That is an uncommon level of transparency. And that is the kind of thing that gives people more trust and gives you a competitive advantage. So Pat, any closing thoughts, things that you wanted to tell the Mortgage Coach community, or if you want to just play on to the other tactics and strategies to be the leader, not the follower, as we come out of and we open America?
Well, you just reminded me of a conversation I had once with Robert Schiller, and I may have shared that with you. He was telling me, he said, well, Pat, he said, I don't think investing in real estate is a good idea. And he still says this. And he says, the average homeowner appreciates 3.6% a year. And I said, well, Robert, that's true. But how many Americans can buy an asset with 20% down? And at that time, with the interest rates, I said, that's about a 14.5% return annually. And, so don't be afraid to give people specific benefits to what you're doing. I mean, the reality is they're embarking upon something, again, it's a very complex, unknown process. And that will also influence their overall willingness to do something, but also it heightens the fact that they don't know everything. Don't be afraid to encourage them, because I'm going to tell you straight up, I meant what I said earlier. Buying a home is the avenue for wealth accumulation that's most realistic for the average American. I wish to goodness so many people would buy homes. They will not regret it. And don't be afraid to tell them that.
Love that. So guys, if you got value, give us a like down below. Pat, you guys have an incredible website. You got a great leader of your marketing, Justin Tucker, friend of mine. How can people best learn more about your company? And I know you guys have some blogs. What's the best place to go?
I think just WFG National Title, and you can follow and learn about locations, processes, information. There's a lot of videos on there about things, a lot of interviews. That will tell you everything you need to know. But don't be afraid to ask our people too. One of the things that I tell, and forgive me for saying this, I tell everybody this: if our clients make more money, we make more money. So we're here to help our clients make more money.
I love that. Well, I love your heart, brother. You do a lot to help the world, to help the local community. I appreciate the time you took to come into the Mortgage Coach community and VisionCast. Remember, guys, if you have questions, I will make sure they get answered. Maybe even get Pat back in for another session. So, Pat, thank you very much for the time today.
My pleasure. Thank you.
Take care, brother.